Shares of Raw Stores popping in overtime after posting a beat on the top and bottom lines in its earnings release just moments ago. Joining us now is CFRA equity research analyst Zachary Warring. So, Zach, anything in the numbers either jump out to you in a positive or negative way? Obviously, the market likes it. I know the guidance maybe not as aggressive on the comp line as you might have liked to see, but what are your takeaways?
Yeah, it was a really good quarter. It was what we expected. And it's like you said, they're pretty conservative when they give guidance. So, 2 to 3% for the rest of the year. We think this was a great quarter. We kind of expected it. They tend to guide low and beat pretty well. 159 compared to 149 consensus, which to us is a good quarter.
It feels like, the collective opinion about where to go in retail stocks has been consistent for quite a while, which is that the net winners are the Raw stores, the TJXs, where they have, a value offering. They're kind of able to still grow their store footprint. Shoppers like to do the shopping there in person, all the things that you might list as their virtues. And yet the valuations also seem to reflect that, right? They traded, 2 and 3 times what a department store would. So is all that sustainable? Does that story remain intact?
Yeah, we do have some issues with valuations. TJ Maxx reported, just a few days ago, and their shares are obviously trading at like 26 times forward earnings, which is pretty high even for them. And Raw Stores and After Hours is almost in the same boat. So, 25 times next year's earnings, which is steep to us. And we think, analysts have priced in pretty much perfection here. They're pricing in about 10% EPS growth over the next 3 or 4 years. Which they can achieve, but usually it's pretty bumpy along the way. You don't see a straight line, 10% growth year over year, every year. So, we think right now shares are kind of priced to perfection.
And then where within retail then might be better set up in terms of risk reward? You see various chains going in different directions, but just, Urban Outfitters today, stock was down 9.5%, Williams-Sonoma, some other areas. Are there names that you would focus on as alternatives to these?
Yeah, we kind of like the stalwart. So we upgraded Nike just a few weeks ago. We thought Nike was trading at a pretty, decent valuation, and we think a lot of the stories there are overblown. We think they'll figure it out. They do have competition. We're not downplaying that, but valuation for them is pretty much at a historic low, or was. And then Lululemon is kind of in the same boat. Lululemon traded at 17 times forward earnings just last week, which we thought, we were kind of pounding the table on. They're a great company. Estimates for Lululemon still, just considerable growth, 10% growth EPS or revenues, and then 30% EPS growth for this year. And shares are trading at 17 times forward earnings, which we think is pretty ridiculous.
The historical playbook would suggest that, chain retail might be one area that could get a bit of a lift if we're going into a Fed rate cutting cycle. Of course, we never really had the outright consumer downturn that the Fed might be helping out with here. But do you see the Fed policy change as being something that's going to be a swing factor for this sector?
Yeah, we think it is until the Fed first moves. So you see a lot of these companies with maybe a lot of debt, or their balance sheets aren't great. They typically have been moving as rates move. So you'll see, companies like Vans or VF Corp, they'll move 7% in a day, strictly because they have a pretty, heavy debt load, and you'll see that move. But we think that'll kind of end once the rate cycle starts.